Hello, everyone. Welcome to the overview of the NB100 application. My name is Marianella Perry. I am here with Margot Saunier and Ramon Silva. We are at the New Bedford Economic Development Council, and we are the hub for the NB100 grant program. Today, we'll be walking you through the application process for the business narrative and the financial data spreadsheet portion of your application. The goal is to help clarify any questions you may have before you submit your completed documents. So I am going to hand it off to Ramon, who is sharing his screen so that he can go over the details. Best of luck with your application.
So this is a good preview of what you're going to need to submit. The first item is a narrative business plan of your business. Now, this should explain to someone who has no idea what your business is or what you're doing, what product or service you're going to provide, and what is the basis for the revenue that you're going to be generating. What is required is linked to where it says, please use the template here. As I link to that template, there's going to be a fillable PDF that pops up. You'll see the form fields that can be easily filled in. Some background information on your business's legal name, whether you are a sole proprietor, an LLC, an S Corp, a C Corp, your business's DBA name. If you're a sole proprietor, you may operate under a different trade name, or even if you're an LLC, you may have a DBA name that you do business as, the business's legal address, the business structure, your business EIN, which if you're a sole proprietor, may be your social security number, or perhaps you have a separate EIN number that you apply to for the IRS. Your business phone can be your cell phone, your business email, your business website, if you have one. And then ownership of your business for anyone who owns 20% or more of the business. Second page is where we start to get into some background on your business. What is the date it was established? If you're a new business, maybe it hasn't been established yet, or it will be established in the future. You can just put TBD there. When did your business open, or when do you expect it to open if you haven't opened yet? And then how much money from loans or outside investment, how much will you contribute? This should be the total of what your business needs to get started and a short description of where that money's going to come from. Whether you're relying on the Kickstarter grant, you're relying on some private investment, whether you've taken out another loan from a bank, whether you have some family that's, giving you money to get started. How or what is the money needed for? Simple description of what those costs are and where the money's going to be applied, and then how will the funds benefit the business? This one should be pretty simple for just about everyone because this is a startup business program. It should be, it's going to provide you the funding to get your business off the ground. And your business description, first thing should be what good or service are you providing? What's the need for that good or service? Comes down here in your market information. The present size of the market should be based on a little bit of research that you've done, and you should know, what is your customer base? What's the market's growth potential? When the market does grow, how will you grow with it? How are you satisfying your market? How are you going to price your service? And this is important. This should be, if you're providing a service, are you charging by the hour? Are you charging by the service? Do you have a flat rate? Do you have a fee for a product? Do you have a product that you have to manufacture, that there are costs involved in that project and you're charging 2 or 3 or 4 times the cost? How will you attract and keep your market? Should be some type of marketing plan that you may have. And then how are you going to attract repeat customers? And then what price are you charging for your product or service, and how does that relate to the rest of what's being charged in the market. How did you arrive at that price? A little bit of what I explained before of what does it actually cost you to produce that product or service? And then are you going to be profitable at that price? This question is important because it may be, and it may help you think about what you're actually charging for your product or service. Could you charge a higher price, but will that decrease your market share? If you charge the lower price, does that mean that you're going to be profitable? So how did you arrive at the price that you're charging or the price at which you're selling? And how does that price make sense? Competition in your market. Everyone that's looking at going into the business should think about, does that product or service already exist in the market? And what are other people charging for it? How will you differentiate your product or service from theirs so that people are going to choose you over someone else? And then how are their operations similar or dissimilar to yours? Are they more focused on volume and you're more focused on quality? Are they more focused on providing a product or service at a cheaper price, but you're going to charge a higher price, but you're going to provide better customer services? And then something that you should also think about is, how are they stronger than you and how may they be weaker than you so that you'll be able to gain market share? These next questions about the location of your building or your space are important for a few reasons. One, are you operating your business out of a space that makes sense, both physically, does the space work for you? And also, can you afford, or does it make sense to your budget? The space may work for you physically, but if it's priced out of your range, it doesn't work for the budget of your business. Or are you trying to operate a manufacturing company out of your bedroom that doesn't work physically for you? It may have a cheap cost, but it may not work as a physical space. And that's pretty much what that first question is about. Then, is it leased or owned? Are you requiring renovations? If there are renovations required and you're leasing space, are you required to do those renovations, or are they provided by your landlord? Any type of leasehold improvements that you have to make, or even if it's space that you own, are there any type of renovations that you have to make that should be included in your startup cost? And then probably most importantly, does the zoning permit your type of business? No one wants to lease a space or rent a space or renovate a room in their house to do a certain type of business and then find out from the building department or the board of health or maybe even the state that you can't actually operate that business in that space.
That's really important. I think it's a yes or no question, but that's a big yes or no that could determine whether you continue in your business or not.
And it can really impact whether or not you lose your investment. If you start spending money on a space that legally your business can't operate in, that could be the end of your business. Or it could require you to jump through legal hoops, with zoning changes or other type of legal issues that you really could have avoided. Management is important. For most people that are just starting out, they're going to be the manager of their business. It's important that you have some background in management, whether you have background as experience or background in another business. You should at least do some research on what it takes to effectively manage a business. Even if you don't have employees, you're still responsible for managing a business. And that means, for most people, doing the books for that business, doing the banking for that business, doing the marketing for that business, doing your legal and making sure that you have in permits, the proper permits and proper licenses to operate, making sure that you have the proper insurance. Those are all things that, as a business manager, you're going to be responsible for. And that's why we ask these questions. If your business is hiring people other than you as the manager, we just ask some questions here about what are those positions that you're going to need to hire for, the estimated number of hours that they're going to work, and then whether it's hourly or weekly or salary, what is their projected pay? Because that should be factored into the next part when we start to look at your business expenses.
Can I pause you for a second there and ask, for this personnel question, let's say, for example, you have management experience, but you don't have experience with accounting and managing books, but you're going to, or you have already hired a bookkeeper. Would this go into this section?
That's a good question. This is for only employees of the company. Your budget, you'll see that under the expenses are going to be where anyone who is contract labor and is not a employee of the company, such as, maybe your lawyer or an outside accountant or a bookkeeper, they will be listed under your expenses. This should be really for your employees
that are working directly for you,
getting a paycheck.
Great. Thanks.
Let's look at our templates for business startup, which you'll notice is a spreadsheet, an Excel spreadsheet. You can also use it with numbers or any CSV file through Google Docs, but it is a spreadsheet. So you'll notice that the spreadsheet opens in page view. What you may have to do, depending upon the settings of what you're using, is make sure that everything shows up on the same page. So the first page of our spreadsheet that comes up is the projected income statement. So for year 1 and year 2, what are you expecting your gross sales to be? If I put in a number here that we're expecting $50,000 of gross sales in our first year, what is the cost of goods sold? If I am providing a service, I may not have cost of goods sold. If I'm selling a product, I am going to have the price of whatever I pay for that product. If I'm a carpenter and I am, building porches or decks for people, whatever the cost of the materials that I use would go here. If I am an artist, I may choose to, per project or per service that I'm selling, I may have a cost for each of those projects. If I am painting murals, I may put into each mural that I paint the cost of the paint that was needed for that mural. So that is your gross sales, and then your cost of goods sold. If I make that for this business 20,000, you'll see that it'll tabulate that my gross profit is $30,000. Now, if I have employee wages, which should tie to the personnel that we listed in our business plan, those would go here. If you had payroll taxes, which are paid as part of your employee wages, which should be paid, and they are typically a percentage based on the number of employees and the amount of actual payroll you have, they would go here. If you had contract labor, which would be if you are paying some other artist 1099 wages to work with you, but they only work with you by project and they're not actually employees, that would go here. Any office supplies that you had would go here. Repairs and maintenance would be repairs either on a property that you have, that your business operates out of, or maintenance for that property, or it could also be repairs and maintenance on equipment. Advertising and promotion is pretty straightforward, but be sure to look at Facebook, what you're paying for Facebook ads, what you're paying for website hosting, what you're paying for website design, what you may pay for monthly website hosting fees, what you may pay just for any type of advertising or promotion, even if it is typical print media or if it is web-based. Auto and travel expenses are pretty straightforward. You have the standard deduction for mileage. and then other travel expenses that you may need for your business. Professional services is what we talked about a little bit earlier. If you need bookkeeping, accounting, legal, any types of services like that. Rent should be rent for space that you've leased. It can also be rent for a portion of your home, but that should really be thought about because there are some other tax implications for writing off business use of home expenses. And they would definitely need to be reasonable for your type of business and doing that business out of your home. Telephone, utilities are pretty straightforward. Insurance, taxes and licenses, and then any other miscellaneous and other expenses that you may have. Your total operating expenses will tabulate. Just let's say for this business, there are a total of, and I'll just put them in other, $10,000 of expenses. You'll see total operating expenses at $10,000, and your operating profit is $20,000 for the year. This assumptions is perhaps more important than any of the numbers that I put into this spreadsheet, because the assumptions are going to tell me or anyone else how you came up with this $50,000 a year in gross sales. They're also going to tell us how you came up with your cost of goods sold, which is directly related to your gross profit. And then also with these expenses, how you came up with these expenses. So if I am providing a service and I am charging by the hour, and I am charging $100 per hour for my service times 500 billable hours. And that's how we came up with the 50,000.
So this is a very simple explanation. Most people are not going to be that straightforward because you might have multiple services, you might have multiple rates of services or products. So this assumption could be pretty detailed. I mean, you can fill up the entire space with it. And that we encourage you to do, because this is probably the most important part of this spreadsheet, as Ramon said. And we've noticed from past grant applicants who have left this blank, we're gonna come back to you and say this is an incomplete application. So don't do that. Pay attention to what Ramon is saying right now and fill out this area on the spreadsheet.
For someone with a different type of business that may actually be producing a product, you could say, I am going to sell 50 products sold at $1,000 each. And you may have a cost of $200 each. One other thing to keep in mind is that these assumptions should be reasonable. If your projected gross income is $1 million and you say that you're going to sell, $100,000 items at, 10 of them for the year, that may be a little bit unreasonable. Or if you like what I said, I'm going to sell 1 million products at $1 each. That's probably not reasonable. So these numbers should be reasonable and should tie back to what you've explained your product or service that you're providing in your business plan actually is. And the more detail you can get into with your assumptions, the better. If you know what your rent is, I have a lease for my rent of $1,000 a month. I've spoken to my accountant and they're going to charge me $300 quarterly. Have already gotten insurance, and this is how much my insurance is a year. I know that my web hosting is $29.99 a month. I know that the permit that I need to operate from the city is $40 a year. The more detail you have here, the more reasonable and the more professional your projections are going to look. And it's actually going to be a benefit to you being in business to be as detailed as you can here, because it may help you actually think about things a different way. And then you may realize you need to go back and adjust some things that you have in your business plan. Maybe I need to charge a little bit more. Wow, I didn't realize my costs were going to be this high. I definitely need to charge more. Or I'm not going to be able to put in the number of hours that I need to put in at that price to make what I need to generate. So maybe I need to go up a little bit more on my hourly rate. These are all things that matter, and they're all things that are going to determine whether or not you're going to be successful.
And for some of the applicants, some of them have not started their business yet. So this is a projection. Others, you might be in your first year. So your first year numbers may be based on reality of what actually is happening. My question for you is the operating profit loss. Are you looking for a specific range there, or just all needs to be reasonable? Like, this all makes sense within the business that you are doing.
I guess there are two parts. One, it needs to be reasonable. And two, it does need to make sense for what you are doing. We're not looking for a specific number, but we are looking for something that justifies the investment that you're going to make for startups. If your startup costs are going to be $20,000 and you're going to show that you're going to lose $100,000 a year for the first 2 years that you're in business, well, that really doesn't make sense. So whatever these projections are, they should justify the investment that's going to be made to get your business started. If your business is going to continually lose money, that's not going to be a viable business. You should want to make a return on your investment. And that, I guess, is a pretty good segue into our business startup cost. That is the second tab on the spreadsheet. So this business startup cost is second most important thing that you're going to need to get right in order to get your business funded. So we've got two different sides of this, and what you'll see is they each subtotal, and then they total to the total funds required to start your business. First section of one-time expenses should include anything that your business needs in order to get started, to get off the ground. Any equipment that you need, any one-time payments that you need to make. Those could be insurance, those could be website design, that could be web hosting. It could be physical items such as, a computer, a camera, a laptop, but they should be as detailed as possible. And if they are items that you're going to be purchasing, they should be specific items. It shouldn't say computer, $1,500. It should say 2021 MacBook Pro Model X and the exact amount, or Nikon camera, DSLR with the exact amount. Web hosting to, and the company that's doing your web hosting, and an amount. Graphic design to, and the amount. For any items that you've already purchased, you do want to probably attach the receipts so that we know that you've already paid for those items, and we can give you credit for them as part of the equity in your match. If you've already done some of the work, or you've provided a service that your business may have needed to get outside, then you should say, hey, I've designed my own website, and this is the amount that would have cost me to do somewhere else. Probably wasn't $10,000, and you're probably not going to get credit for $10,000 for designing your own website. But if it's a reasonable amount, we'll give you credit for that into the equity that you need to provide as a match for this grant. In addition to the equipment and one-time expenses, you may have needed some licenses, you may have needed some permits, you may have done some marketing. Margot, help me out if there's any other one-time expense that someone may have had.
Can you put a deposit for your physical space?
Absolutely. Deposits for a lease, deposits you may have had to put with utility companies, anything like that should also be included. And any equipment or supplies that you've needed to get started. Those should also be listed, but they should be as detailed as possible, and they shouldn't just be roundabout numbers.
Okay, this is really good information to put the exact computer, the exact equipment with exact prices.
Sure. If you want to go on Amazon or Best Buy and print out, hey, I'm buying this, or I'm building out a salon and these are the chairs that I'm getting and I need 4 of them, or I have an estimate from a plumber to do the work for the space that I'm going to lease, and this is what it is. Anything like that, as specific as possible. Receipts for stuff that you already have, maybe a cut sheet for stuff that you're going to purchase. That should be included there.
Okay. How would they provide receipts? Is that something?
Yep. They can be uploaded with a PDF of this spreadsheet into that space where it asks for your startup cost. Any addendums or attachments that anyone needs to make can be uploaded as PDFs right into Submittable. So the second part of this spreadsheet, your monthly fixed operating expenses. These could be rent, utilities, monthly web hosting, monthly insurance.
Most of these items are on that first tab in your projected income statement. So would you say?
Yes. So this is going to be where that first projected income statement is going to be your annual expenses. This is what are those expenses monthly, and they should tie.
What I like about this template is that the formula here will tabulate per month. So you could do 1 month, 2 month, 3 month, or 12 month and get your total that you want to put in your yearly expenses.
Start with this sheet first.
Yeah.
You'll know that, all right, my 12 months of insurance that should go on my projected income statement is the total of what the 12-month number on this spreadsheet is. These sheets should tie back and forth. For your monthly fixed operating expenses that we will give you credit for as a startup cost, for most businesses, I would say are probably going to be limited to 2 or 3 months. By that time, you should be generating enough revenue to hopefully meet your monthly expenses. You may not meet all of your expenses if your business is not projecting a profit in the first year, but for many of your monthly fixed operating expenses, you should be able to cover. So if you have rent and your rent is $1,000 a month and you're projecting that for 3 months, it's going to need to be covered by your startup expenses. You will see that your 3 months worth of rent are now totaled into the total funds required to start up your business. If there are one-time expenses, and if I need a MacBook Pro 2021, and I know that that price is $1,221 at Best Buy, then now we know that our total funds required to start this business are $4,221. This is important. So everyone, please pay attention. This grant program is a $10,000 maximum to go towards your startup cost, but it requires a 50% match. So in order to be eligible for the full $10,000 grant, your business startup cost must total at least $15,000. You must provide $5,000 worth of equity in order to receive the full $10,000 worth of grant. Now, that equity can come in multiple different ways. It can be a service that you're providing to your company that, based on an hourly reasonable hourly wage, you're going to donate back to the company or you're going to use as equity to get your company started. You may have already purchased something. If you've already bought this MacBook Pro, you should put it's already been purchased and provide a receipt. That way we can give you credit that these items that have already been purchased that you're going to use to start your business. This is something else that's important. If all of these costs come up to $100,000 to start your business, and you are then eligible for a $10,000 grant, we are going to need to see where that other $90,000 is coming from. So we can't provide you with $10,000 to start your business that cost $100,000 without proof of where that other $90,000 is, because then you're going to have $10,000 from us and needing $90,000 more to get started, and that's not going to work. So any amount here for the total funds required should be able to show where that money's coming from, whether it's $10,000 from us and $5,000 from you, either in cash that you have in the bank, or that you're going to borrow from a parent, or you're going to borrow from a friend, or you've taken out a loan for. We're going to need to see where whatever cost in excess of our $10,000 and your $5,000 in equity that you're going to demonstrate that you're putting in somehow is coming from.
I do think that that is the most important thing that some people might not realize, that total funds like this is the most important page, because the total funds required needs to be 15,000 or more.
Right.
And the clients that we've been working with, many of them have already put in a lot of expenses in their own investment in their equipment, website design, all of that. So it is really sitting down and detailing all of the startup expenses and your monthly fixed operating expenses. Like you said, it's the startup expenses that it's a little less straightforward. But once you start going through everything that you need to start your business, this should be a pretty lengthy list of items.
Don't cheat yourselves. I've spoken to people and I said, well, you're doing this kind of business. Didn't you have this? Yeah, I paid for that. Put it down. Otherwise, you're cheating yourself. Anything that you've already paid for, put it down. Anything, and you may not think about it because you're using it already and you're using it every day, and you're only thinking as your startup cost as the things that you need to go out and still acquire. That's not it. Anything that you already have, that you've already purchased, that should be one of your startup costs.
Exactly. For anyone who, and this is for people who have, well, it's for everyone. If your total funds required are less than $15,000, this might not be the program for you.
It can be the program for you, but you're not going to get a $10,000 grant. If your total funds required to start your business are only $10,000, then the maximum grant that you're going to be eligible for is $7,500. And you're going to be required to put in $2,500 worth of equity. Again, either cash or time or service, or, money borrowed or money, loaned from somewhere else. And in order to get your application processed and get funded as efficiently and as quickly as possible, complete explanations that provide the most detail are going to be the most helpful.
And then briefly, can you look at the cash flow projection tab?
Sure. So in the final tab here, we have your cash flow projection. And this is hopefully going to show you whether or not you're going to have the cash that you need to operate your business. So on a month-by-month basis for the first 12 months, it is going to be, what is your investment? What are your startup costs? And how much cash do you have left over? So investment, if you had a $15,000 in startup cost, you are going to get $10,000 from the Kickstarter grant, and you're going to provide $15,000 of your own equity. So your investment is going to be $15,000. If your startup costs are $15,000, you'll realize that you'll have no starting cash. There's no remainder, there's no starting cash. So in order to fund your business, you're going to have sales in month one. Now you have $3,000 of available cash. If your business is producing a product, you're going to have inventory, wages, any of these expenses, which should tie from your fixed cost calculator on the preceding spreadsheet. Your expenses are going to total, and it is going to tell you here how much cash you are going to have to start month two. So if you have $3,000 in sales, if all of your expenses, and I'll just put them in here as all other, are $2,000, you're going to have $1,000 to start month two. And as we go through each month, you'll see at the end of the year, what are you going to have in available cash? And this is important because it is going to help you track if you are going to have the funding necessary to operate your business. Your cash flow projection is a little bit different than your profit and loss statement, because your profit and loss statement looks at everything on a yearly basis if at the end of the year you're going to make a profit or you're going to have a loss. This monthly cash flow projection tells you whether or not you're going to have the cash you need to operate on a month-to-month basis.
This is great, especially if you're selling products or have a retail business, to know how much, like, your sales goals. Like, I need to reach this number of sales in order to be sustainable in my business.
Or if you're going to have a cash flow shortage at the end of the first few months, how are you going to meet that need? Do you have a credit card? Do you have a line of credit? Do you have terms perhaps with one of your inventory providers that, okay, I get my inventory, but I have 90 days to pay for it? How are you going to meet the monthly obligations that you have to make for the business?
I think that completes our review here. Any last words of advice for our NB100 applicants?
When you have a question, ask a question rather than guess at something or submit something that is incomplete. Don't be afraid to ask the questions. The success of your business or the success of your getting this grant can hinge on it. There are resources available to you. Please use them and submit great applications.
Thank you, Margot and Ramon. This was great information for applicants looking to submit a high quality and complete NB100 application. Thanks again for watching and good luck.